personal gift, estate, capital gains, da, 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 da. So I think you'll be willing to tolerate this. Your leases are going to be a matter of what the market will bear in your area and the kinds of homes that you're building, right? I mean, nobody's going to tell you your lease costs. You're going to figure out what the market will bear in your area, and you're going to charge as much taxes, as much of the lease as you can. So let's pick a number. Let's say you can lease these properties every day for $5,000 a month. You're going to deduct from that your cost of doing business. You're going to deduct from that the property taxes, because part of that's going to be the property tax that you have to pay as the owner. And that's going to come down to some subset of that $5,000 a month, and that's what you'll charge the tax rate of. Have I answered your question? Come up, because nobody else is interested in this complex little thing like you are, so come up and see me after class, and we will do it in full. But I promise I've answered the question as far as I understand it at this point. Yes, sir?
I don't know much about the Huckabee proposal.
It's the same one. Huckabee read our book. You want to know how that happened? I have, no, I didn't, but close. Dick Morris, everybody know who Dick Morris is? Okay, I have breakfast with Dick once a year whether I want to or not. Okay? 3 years ago I had lunch with him, I introduced him to the fair tax, he listened, and you can imagine how he, okay, whatever. And then a year later I had breakfast with him, I gave him the fair tax book. He says, thanks Tom, I've been paying a little more attention to this. Last year I had breakfast with him, he comes to me, Tom, what do you think about Huckabee? And I'm like, well, it's been doing a good job for us, it's been great. Yeah, but Tom, I gave him the book. I gave him your book. So Dick Morris takes 100% credit for handing Huckabee the fair tax book. I let him have it. It's cool by me. I've actually never met Huckabee. I'm here to tell you, I knew that when he started talking about it, he'd read the book, he'd read the materials, he was not parroting anything, those were his words coming out of his mouth, but they were an accurate reflection of our proposal. I know that none of the people on our board gave him any money. I know we had no influence whatsoever. It was an honest decision made on Huckabee's part based upon him reading the book. I know that. There was another one here, right? Absolutely. We were at almost every single one of them. And in some cases it was a fair tax party and we invited the Tea Party people, and in some cases it was a Tea Party and our fair tax guys went. We have a huge grassroots organization. Yes, it is. This is real grassroots, guys. This is real grassroots. This is not grass tops, astroturf, whatever you want to call it. The fair tax organization are these volunteers right here. And I'm a volunteer. I don't get paid for this. I'm up here at my own expense. Yes, sir?
I have one question. You mentioned visits several times. And you mentioned the market stores, you mentioned an extra health cost, things like that. This is transition period. Transition period from the fair, and you said all the wash out
Yep.
in a period of time.
Yep.
Well, how long is this time, and how will the degree, all right, and within Corporate America affect that transition? And what will happen to all that money that can be lost or made during the transition?
So everybody heard, we're going to have a transition period. We turn the lights off on the IRS on December 31st. We turn the lights on the fair tax on January 1st. There'll be a transition period. This is a little complex. We're into developing and leasing here for a minute, but stick with me. All the products that are in inventory on the day we turn off the lights have the income tax costs built into them, right? And there's going to be warehouses full of stuff. Okay. All of that stuff has a SKU number. The magic barcodes, okay, all that stuff has a SKU number. All the retailers can keep up with it, okay? That stuff, no tax is charged on it until the new inventory turn comes in, and then the tax is charged, okay? So that way you're not double taxed, and it's very easy to keep up with 90% of the retailers who collect, 8% of the retailers who collect 90% of the taxes. Those are the sophisticated retailers. We're not talking Sister Sadie's antique store down the road, okay? But again, 90% of the sales taxes are collected by 80% of the retailers. So that's a transition rule that is built into the bill to smooth that out. There are a couple other details in there for transition rules. It's going to be a chaotic time, okay? It will last 3 months to maybe a year. There'll be upsets, but again, I emphasize, the most sophisticated retailers collect 90% of the tax. It is no problem for them. I've talked to all 3 companies that supply the point of purchase software to them, which automatically spits out their tax reforms. They all yawn and say, oh, that's just a software upgrade, no problem. So, yes, it will be interesting times. It is unavoidable. We are tearing down an awful system. We have people who still ask me, well, Tom, what am I going to write off my stuff against? And I say, look, you're still living in an income tax world. You'll get your whole paycheck. You don't need to write anything off anymore. Your tax planning is done when you decide to take your wife to McDonald's for your wedding anniversary, or you take her to the top of the Sixes. I don't even know if the top of the Sixes is still in Manhattan, but whatever. You know, that's your tax planning, and perhaps it's your marital planning too. But there are going to be upsets, I guarantee it. But I've gotten rid of personal gift, estate, capital gains, alternative minimum, earned income tax credit. I'm giving you a good deal at the other side.
Actually, most of those taxes, most people don't even have.
But they all pay Social Security. They all pay Social Security. That's correct. And it's gone. Full paycheck. And let me tell you, that is the key. When you talk to the elevator story, I wear this button. Sorry about that. I wear this button everywhere I go. When I'm talking to taxi drivers, bellhops, people in this room. You know, when I got married 26 years ago, my wife saw my pile of stuff for my taxes. She found some receipts from a doctor. And she said, who's Dr. Weedy? And I said, well, he's one of my doctors. And she said, you're healthy as a horse, you never go to the doctor. Who's Dr. Weedy? Well, he's a doctor. See, it's Dr. Weedy. It's right there. He's got the receipts and everything. She said, yeah, I got that. But I know you don't go to doctors. Who is Dr. Weedy? That you're deducting these medical expenses from your taxes. All right, he's my veterinarian. And it was for my 2 Irish setters. And she says, you can't deduct that. Now, statute of limitations is 3 years. That was 26 years ago, so I'm 23 years past the statute of limitations. But what kind of insanity is it that we are filling out forms as complete as this income tax system, which every president since Eisenhower has said they're going to simplify the system? You can find a quote from Eisenhower, you can find a quote from Kennedy, from Johnson, from Nixon, from Carter, from Bush 1, Bush 2, Reagan. Some of them actually got something done. You notice how non-partisan I'm being here? Every single president we've had has said, I'm going to do something to simplify the tax code. There's a definition of insanity. That is doing the same thing over and over and expecting a different result. Everybody with me? Every single president, Republican or Democrat, since Eisenhower has promised a simplification of our tax code. And if you look, every time Congress has told us they're going to simplify it, they've made it more complex. The income tax system is a broken system. It is irreparable. It cannot be fixed. There is no way. It is now so complex. How much do we spend every year just to fill out our tax?